Hi guys, this is Teacher Party. Welcome to my YouTube channel, Accounting with Teacher Party. Like, subscribe, share. Yeah, download the videos, share with your friend. And oh, sorry, man. Wow. It's Monday morning. Guys, I want us to finish the cash budget. So we did the new era cash budget. Now I want us to do the IEB cash budget. Now they've given us, it's November 2021. They've given us a projected income statement. They want us to do a cash budget for February. They've given us some figures. You know, the IEB will fill in stuff for you. Yeah. And you have to solve for X. So sorry guys, I just had an acid cool drink. So if I burp, it's not because I'm trying to disgust you or something. I'm trying to just discuss you or something. It's just that the acid keeps on coming up. I should have not had it. Okay, sorry about that. Now, you see the trick with this. Do the easy things first. Do the easy things first. Ne? Your data's collection is a bit tricky, and your cash purchases of stock. So let's start with the other transactions. Let's choose the quick wins. Yeah. Okay. Says the owner of the shop premises rented to Cindy's boutique has asked if she can take some dresses at a selling price of 13,650 in February, cost 6,500. The selling price will be deducted from the rent that needs to be paid in February. So here is the rent expense. This is the cash budget for Cindy Boutiques. This is a cash budget for Cindy Boutiques. So Cindy Boutiques is renting the property where they have their boutique. So the owner took pieces of clothing for that to be taken out of the rent money. So now we need to calculate what they should budget for. What they should budget for in terms of rent for the current year. So rent expense 62,700 minus 13,650 to 700 minus 13,650. Okay, so this is what they should budget for, because the other part of the rent is taken as is taken out as inventory, the pieces of clothing. Okay, electricity they've given to us. Other, let's go back into transactions. Purchases we're gonna do last, and debtors collection. The employee costs consists of salaries, which is 100%, gross salary is 100% plus 1%, that is 101, UIF contribution plus 10%, that is 111, pension contributions, and 20% medical aid contribution. So that's 130%. Gross salary is the full package, remember, which is 100. And then this is what the employee gets. These ones, the 1% UIF, 10% pension, 20%, this is what the company is adding on top of that 100%. So the company is adding 31% more to that 100%. So it's 131. Cindy is planning to stop contributing the pension to the pension fund and the medical aid from the end of January. So the only thing they're contributing is the UIF. So now from 131, now they're contributing 101. So we must calculate. Let's copy this. Okay. $55. I am trying to copy this. So now we are moving to 101% divided by 131. The 55,020, the January figure, it was 131. Now it's dropping to 101. Payment to creditors you were given. Let's continue. Cindy's boutique's other expenses for February consist of the following: cash purchases for consumables, depreciation on equipment, cash purchases on stationery. Depreciation is a non-cash item, guys. Remember I said The cash budget is a futuristic cash flow. So in the cash flow, we try to take out in depreciation as much as possible because it's a non-cash item. It's the same case also for the cash budget. So sorry guys. We're given. Okay. Since this boutique has 3 cash registers, they decided that they can make do with 2 and has found a cash buyer. One of them, she will sell it in February. The details of the cash register when she sells it in February will be as follows. It's the cost price, accumulated depreciation, this is the profit that they made. Okay, so now this means we need to solve for x. Guys, we did asset disposal. We did asset disposal, so now we should work out the cash price. I just want to copy this. Okay, the cost price is 7,000. Okay, and then the accumulated depreciation. The accumulated depreciation is 3,490. I'm making up stories. Sorry, guys, it's 4,230. So you know, the 7,000 would have been on the debit side in the ledger account. The accumulated depreciation, including the depreciation for the current year, would be on the credit side. Now, if it was loss, it would be recorded on the credit side of the asset disposal, but this is profit, it will be recorded on the debit side. Okay, 2890. The interest expense consists of interest on overdraft and interest on loan. The interest on loan is capitalized to the loan account every month, and the debit order of 23,000 goes off the bank account to pay off. So this 945, it's part of this 23,000 because it's made a balance. It's made part of the balance every month. So if we are recording this 945 again, then it means we are double counting. Now, the only interest we can record is the one on overdraft. Okay. Now, guys, we've done the easy part. Let's go now to the interesting part. %60 of stock purchases are for cash, and 40% are on credit. So payment to creditors is part of the 40%. So now we need to work out the cost of sales. So cash sales is okay. Now we need to calculate the total sales. Cash sales is what percentage? 80% of the sales are on credit. So 80% of the sales are on credit. So meaning the cash sales is 20%. It's 265. So these are the total sales. These are the total sales. Now these sales that we got, we need to make them cost of sales. Meaning this is 100 divided by 210. Where did I get 210? With cash budget guide, every detail counts. From January, the markup was 90. Now it's 110. So 100 plus the markup is 210. So we get 126, 200 cost of sales. Okay? But we purchased more material. In fact, we purchased more material or clothing items like dresses to sell. But then the owner said he or she wants us to give to this value of 13,000 against the rent. So which means our purchases also includes what we used to offset the rent. Remember, I said cost of sales will minus donations. Yes, to get to the cost of sales amount, we will minus donations because we want to know the cost to make a sale. But here now, we are calculating the purchases. Even what we donated, we bought. So it's part of the purchases. Okay? So the total purchases then, is 132,700. The total purchases. Then 60 purchases are for cash, and 40 purchases are on credit. So now, why did I forget now? 60%. $79, $620. So now, seems as if we're done with the payments part. Let's come to this one, guys. Cash from debtors. October. Okay, guys. The credit sales for January. You were given the projected, which is 343. But they will increase it it was 343. Now the markup will increase from 90% to 110. Okay. Three four three. 378 to 90. Okay. 80% of the sales are in credit, okay? Three oh 632. There's 343 times 110. Okay. Just trying to see something. Because this increased from This is not the cost of sales. So 300 is going to increase by 20. 343 100 times 120, which is the 20%, which is the 20% projected increase. 343 900 times 8720 plus 343 900 is 41268. So 20% increase. I hope not. Three 144 interpreted at 120 thing, because this is not cost of sales, this is already sales. So this already sales will just do the increase in the markup. Okay. Now they're saying 5% is collected in the month after the sale. So 33144 times 0.05 16 16507. 5% collected after the month of sale. Now they want us to calculate the credit sales for November. We're given October. They're saying 5% is after the month of sale. Ooh, okay. Let's start this. October. November. January. Yeah. So it's a little bit cold, guys. So I keep on moving, and I can't put on heater because I'll fall asleep. So January, the credit sales is 330,144. Multiply by 5, and which equals to Why am I having decimals now? Because I didn't have them before. 343,900 times the 20%. 4468 times the 80% times 5 divided by 100. So I'll round it off to the nearest round. So we have 16,507. Okay. December is 362. 5% is collected in January. Then 10% is collected 2 months after the sale. So thirty-six 200. November, we still need to calculate that. October, October, 5% is collected. Okay. 5% is collected in November. Mm-hmm. 278. Okay? Credit sale, 5% is collected in November. It's 1 month after the sale. 13,900. Okay. Now, the 117,840, which is November debtors collections, includes 5% of October's credit sales. Therefore, so it's 163,940, the collection for November. Is it 5%, 10% after this? It's around 80% of this is credit sales. Mm, 249,2. Those are the credit sales. Okay. January, we got the 1605. Hoping that it's correct. Let me check something. It's very interesting. If I'm working out, the cost of sales using the new markup, it gives me 380. So just see which one they've chosen in the memo. It gives me 380, 100. 181 times 210 divided by 100. So it's 380, 100 times 80%, which is 304, 80. 304, 80. Just gonna see which one we choose. So 304, 80 times 5%, 15204. Just see in the memo which one they chose. Okay. So what I was coming to is that the credit sales for October, 5% was collected in November, 10% 10% was collected in December. Yeah, let's go back. So the 278, 5% was collected in November, the month after the sale. December, they collected 10%. January, they collected the 60%. 20% was collected in February. So we have to do just calculate here, guys. Let me just copy this. Now I'm doing new calculations on this. Just trying to see the money that was collected in January. So 278 times 20%. 755. Okay. Then November, we calculated November credit sales to be 20429. Yeah? Okay. So 5% will be paid in December for November, 10% in January, 60% will be paid in February. One two two nine five five. Then December, 5% will be collected in January. 10% will be collected in February. Then January, okay, January, let's work with that. Increase of 20%. The markup increasing by 20% and getting 3144. So we said 5% will be collected in February. Now let's see what's the total. Getting 230,862. In your exam, they didn't want you to fill this. But I'm just doing it for completeness sake. Okay. Time for the big reveal. Did we do things right or not? Remember, guys, I'm not a robot. I'm a human being. I'm allowed to make mistakes along the way in my calculations. And I am willing to learn. Okay. Let's see this one. So this one is correct. We'll mark it green. This one was given to us. We'll mark it green. Let's see, this one was not calculated. 79,620. Correct. 4040. 1950. Correct. And so I said, start with the easy ones because the difficult ones will weigh you out. 23, 50,000. Now let's check our data schedule. Ah, so November, our figures are incorrect. January, our figures are incorrect. So January, the collection is 275,120. So let's see, 275,120. $343,900. Oh God. See the mistake I did. The the mistake I did. 343,900. Times 80% times 5%. Guys, the mistake I did, January sales will, the credit part of it will be collected in February. So February, the 3144 I calculated, that is for March. Oh, detail. 343,900 times 80% is 120. Let's take it. Okay. Seven, 756. Okay. It's the 5% that will be collected in February. Okay. Now let's see. Okay, what will be collected in February? So December, the collections for February. So the mistake, can you notice the mistake I did? It's double counting. It's already recorded that it's 6,200. So they just wanted the January portion of the sales. So even here, there was no need for me to calculate because it's already recorded. I'll delete this one. It's already recorded. November. November said it's 296,400. Mm. So okay, let's see. This one we've corrected. This one we've corrected. 296,400. So it is 1,774,278. October, 5% of it will be collected in October. 5% of it will be collected in the month after the sale, which is which is 13,900. That is correct. Which is 8,900. 0.05. It is 3,900. It's given there. Then we've got the 3,900. Then November, that is November collection. One 77840. Just want to get at something. to 300. And here the thing. It's 296,400. Now cuts this at 300. Mm, 362. Just want to say something. 300. 360. 5%. 378. It's not, it's not 5% increase. So going back to the principle, that 5% of this figure would have been collected in February, which is what they put there. But now if you divide 177,840 minus 13, then we divide that by 80%, it gives us less of what they have. It gives us less of what they have. So December, we said okay, let's start with this pattern. December, we said 5% will be collected in January. 10% will be collected in February, so this is correct. 278, eh? We said 5%. 5% of 5% of October will be collected in November. 10% will be collected in 10% will be collected in January. 10% will be okay. 10% will be collected or 5% you said collected November, 10% collected December. I think 60%, not 10. Yeah, 10% collected November, 60% collected January, 20% collected in February. Now, the issue here is we are given the collections for November, which will be including different months, these collections. But what we are aware of, that part of these collections included October collections. So we say this is the money this is the money recorded in the collections for February. So meaning for November, 5% for November was collected in December. 10% was collected in January. 60% was collected in February. Now, 60% of this was collected in February. So 163,940 divided by 60%. It's 273. 177,840 divided by. There you go. Do you see, guys, how we found this? They've already given the 39,900 we're taking out. It's already part of the February calculations. So 177 divided by 60% equals to, yeah, that one was a bit of a trick, a hectic trick right there. 296 hundred. 296 hundred. So guys, like, share, subscribe. Okay. And share this with your friends. Okay. Okay. So guys, like, share, subscribe. So what we're battling with here is the principle. Always know what's due when the percentage that is due at what period. Okay, guys, like, share, subscribe. Bye.